So, Ed, last time you were here speaking of the banking crisis, you did expect a consolidation of the banking sector as we would be seeing more and more bank failures. And ultimately, you said we'd land up with around 6 banks in the United States, which would then pave the way for a central bank digital currency, a CBDC, to be issued. That crisis, fewer banks, potentially UBI, universal basic income, in a really bad recession sort of facilitates the way to a CBDC being issued. And we sort of unpacked the horrors of the dystopian future that a CBDC could lead to. Before we get into the CBDC part of the conversation, what's your outlook now? What's your read on the banking sector as it stands?
So the good news, when I was on your show last time, I said this happens one of two ways: fast or slowly. The Fed was able to patch over the duration problem that the banks had, meaning their portfolios were upside down with a duration mismatch. What they're not going to patch up is a credit problem. We're now in the credit problem of the cycle, and banks' loans are going to start to go sour, and they're going to have to report those losses. So the Fed did a good job in delaying the banking crisis. So hats off to them. We'd rather see this unfold slowly than fast. When it happens fast, it creates chaos, and even the powers that be lose control. So I'd rather see a slow unwind rather than a fast unwind. And I'd expect, as the economy continues to weaken, we enter into a recession, we're going to see bank consolidation resume. And my prediction still holds. There'll eventually be 6 banks, or 8 to 6 banks. And that's when it would be easier to introduce a central bank digital currency.
Well, we're already seeing the banks take strain. We've got unrealized losses at banks across the country rising to over $520 billion at the end of the first quarter of 2024. That's up from $478 billion at the end of the previous quarter of 2023. 50 banks saw unrealized losses on their investment security portfolios exceeding at least 50% of their capital equity in the first quarter of 2024. And that's according to the U.S. Bank's unrealized losses on investment securities screener. So we're already starting to see that. It's not getting a lot of attention. There's also a recent report by consulting firm Claros Group, which analyzed around 4,000 U.S. banks and found that 282 banks face the dual threat of commercial real estate loans and potential losses tied to higher interest rates. And the majority of those banks are smaller lenders with less than $10 billion in assets. So we're starting to see, again, problems in the banking sector. You're saying that at some point we're going to go from all of these banks to 6 to 8 big banks in the United States. Last time, I think you were predicting that could happen in as soon as a year. Give us an approximate, and again, I always give credit to people that come out here, make a forecast and put a timeline on it as well. But give us an approximate timeline as to when this could happen and how exactly this could play out.
Let me clarify. There won't be just 6 to 8 banks, but the majority of banking will be done with 6 to 8 banks. There'll be some banks left, but they won't have a lot of depositors. I expect this to, let's give it 12 to 24 months. And you got to remember, in the great financial crisis, this happened fast. A bunch of shotgun marriages happened overnight. Merrill Lynch disappeared. Lehman Brothers went poof. Bear Stearns went poof. And AIG essentially went bankrupt. This could happen fast, but I'd like to see it happen more slowly over 2 years with some sort of control. I know that sounds insane, but we don't want to live in a world where financial markets are crashing 50, 60% in a month. We just don't want to live in that world.
I don't think we want to live in a world, though, Ed, that only has 6 to 8 banks and the control that comes along with that. And as you say, that then ushers the way for a central bank digital currency to be put forward in a much more seamless way.
We don't want to live in that world either, but the more time we have not to panic, the more time we can mount a resistance. And you and I were on here a year ago, and look at all the awareness of central bank digital currencies as being something that people should be alarmed about. We have politicians introducing bills. So the good news is, the slower it goes, the resistance that we can mount to it, the faster it goes, people will panic into it, I think. So I'm actually quite pleased in the progress that was made over the last year. Candidates are highlighting the dangers of a central bank digital currency. So the issue is at least out there, as opposed to where it was a year ago, where people were really not even talking about it as much as they are now.
Right. That is the upside, is that there's a lot more awareness about central bank digital currencies. And a reminder to our viewers, that is a form of fiat currency issued by a country's central bank, which essentially allows the bank to control every transaction, saying what transactions can and cannot happen. And it also creates complete transparency. There's no anonymity. There's no privacy. Every single transaction can be viewed. And then it also would arguably allow for what some say is fine-tuning of monetary policy, where they could just click away some of the money supply or click back in the money supply by just taking out some of the money in everybody's individual wallet to the central bank digital currency. A lot of potential negatives there. Why would fewer banks help facilitate that process?
It gives people less choice. Not every bank would be set up for central bank digital currency. It's just, central planning requires fewer, bigger players. So it's easier to implement if there's a lot fewer players to impose this upon. So it's an operational thing. It's just easier to do.
Right. And as you were saying, look, we have had a lot more awareness about this, which is a positive. Certainly when people like former President Trump bring up a CBDC, it starts to gain headlines. And he actually addressed this very recently at the Bitcoin conference that just took place in Nashville. I think we have a soundbite from that. We can play that now.
Next, I will immediately order the Treasury Department and other federal agencies to cease and desist all steps necessary, because, you know, there's a thing going on in your industry. They want to move the creation of a central bank digital currency. It's over. Forget it. CBDC. There will never be a CBDC while I'm president of the United States.
Does that give you any hope here? I mean, do you still think a CBDC is inevitable?
No, I don't. But what's great is the issue has gotten a lot of awareness. And Trump, just by saying that, it's fantastic. And Bobby Kennedy has said the same thing. And so we have candidates across the globe talking about the dangers of the CBDC, which is great.
They all seem to be Republicans, though. You've got Governor Ron DeSantis, Senator Ted Cruz, House Majority Whip Emmer, as we said, President Trump, and okay, Kennedy, an independent. But I haven't heard anyone on the Democratic side speak against a CBDC.
Well, that's because they're control freaks, and they would love that tool to be able to implement all sorts of crazy control free policies. They seem to have a belief system that if you don't agree with them, you're evil, and they want to impose any way they can their belief system on the general populace. That's my personal opinion. That's why Democrats will never be against a CBDC.
So does that mean that if we have a Democratic administration in power, that then increases the odds of a CBDC being passed, even though there's a motion and Powell has said it would need to go through Congress?
Yeah, the chances are higher. So I think voting Democrat this time is insanity at this point, given what we're seeing come out of Kamala Harris's mouth and her new VP pick, Tim Walz. They're both socialists. They both believe in DEI. They believe in taking from those who produce and giving it to those who don't. I mean, it's communism light.
All right. Well, back to CBDCs. You know, there is progress happening in other parts of the world, regardless of what the U.S. is doing. We know that according to the Atlantic Council Central Bank Digital Currency Tracker, 134 countries representing 98% of global GDP are exploring a CBDC. In May of 2020, that number was only 35, so certainly a big acceleration there. And currently 68 countries are in advanced phases of exploration. 19 of the G20 countries are now reportedly in advanced stages of CBDC developments. We've also got a new report from the Bank of Canada suggesting that Canada's central bank sees digital currencies as necessary to maintain monetary sovereignty and financial stability as the use of cash declines. The bigger point here, Ed, is that if the rest of the world goes along with this, can the U.S. not? Can the U.S. be left out?
The U.S. is going to be probably where the resistance mounts from. So if we fail at this, then eventually it's a global slavery surveillance state. The CBDC is the linchpin of that, digital ID. If everything you do is tracked, it's a disaster for the individual freedom. It's also a tool to implement crazy progressive policies. You know, if people are worried about methane from cow farts, they could then institute, beef quotas, and you can't ring up your groceries at the register, because that's how deep this will go if they have this kind of control. So we have to oppose this at all costs. I mean, if we get close to this, you'll be hearing me talk more and more about it. But right now, I'm very hopeful it's not going to happen in the U.S. And if it doesn't happen in the U.S., the other countries will follow along eventually. Right.
The ultimate form of control, as you say, government can then monitor and track everything you do, from, eating too much meat to taking too many flights, and then they can just program that currency to not work for those transactions. You don't even have a choice in the matter, or it would work, but with a very excessive premium added to that transaction, disincentivizing people from doing it. It's terrifying. And we did see, I always like to point this out because it's so important to remember how we saw tremendous government overreach during the pandemic, during COVID. And an example, Canada, where the truckers who were protesting against the vaccine were essentially taken out of the financial system. Their bank accounts were frozen, and anybody that was donating to them had their bank accounts frozen. That required an emergency act, and it can still be done without a CBDC. But with a CBDC, it's just so much easier to do. Click of a button, and that's that. And that, just the idea of that can deter people from voicing opinions that may be seen as cancelable in today's day and age. All right, but we're hopeful that a CBDC perhaps may be delayed with the increased awareness. You did say, though, that the way to bring out a CBDC is a crisis. And you did say that within 12 to 24 months, you do see a scenario where we have 6 to 8 banks left. So you do expect more collapses in the banking sector. What is your macro outlook then? How does this play out? And you can start off with the short-term outlook ahead of the elections, and then what you're seeing happening in the next 2 years.
Yeah, so short-term, again, this is the economy, the way we measure it, started rolling over from close to the zero line, non-expansion, going back into recessionary levels in March. The structure of the market, and this is technical mumbo jumbo, but what we see from the structure of the market is a pullback into the election, anywhere from 10 to 30%. And that would be scary, but it's not a calamity. And then a rally after the election. And by the way, any kind of pullback into the election favors Trump. A rally after the election. And from that rally, there'll be continued economic data coming in that's bad. Then we think that's when the real potential for the collapse to begin would be sometime towards the end of this year, going into January. So that's our short-term, medium-term prediction. And from there, we'll have to observe what happens. But that is going to be where we think it really starts to unravel, is in 2025. And if that occurs and we're right, and there's a crisis in 2025 financially, we'll see potential talk of a CBDC, because if you want to implement something, you do it in a crisis, and a UBI, because depending upon how bad the job layoffs are, there'll be a lot of people who are scared, and they might try to tie a UBI, universal basic income, to a CBDC. And that's how I would do it if I wanted to implement it.